What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 27th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about why I think the worst is beyond us and why we could, as soon as May, see Bitcoin back up to new all-time highs in price, potentially setting up for the even bigger move going into the later half of 2022. Now, the majority of this video, for full transparency, is going to be a sponsored interview with Alex Majinsky, the founder and CEO of Celsius. But it's a really exciting interview where we also dive into the macro environment. And with Alex not only being a successful founder in the crypto space, but also having a background of living and growing up in Ukraine, he has a really interesting perspective on the current macro environment and the events that are unfolding. So I recommend you guys stay tuned for that. We've got a lot of interesting things coming. So to start off here, I want to go ahead and do a quick sweeping analysis. If you happen to miss the last video that we put out on the market, or the past couple of videos, one big thing that we've emphasized is this continuating pattern here of higher general lows here and higher general highs in Bitcoin's price. And we're seeing this across the major players as well, like Ethereum, as we'll dive into it. And what's so nice to see is the resiliency that Bitcoin has had here. All the while, it has obviously been a choppy couple of months since November. We can see here that the macro environment hasn't been able to shake Bitcoin down into that potential worst case scenario, coming down to 27,000, 28,000, breaking past the previous lows back between May and July. Instead, what we've been seeing is consistent confidence in price, where buyers are coming in, bidding up the order book here, driving Bitcoin's price again from this low bound range in the mid $30,000 range up towards around $39,000 to $40,000, and looks like it's setting up for the trajectory to have a third reattempt here. We've had this general line here drawn on the fact that we believe the correction was going to continue down into the mid $30,000 range. And we've also had this green outline here to indicate that the third time may be the charm for Bitcoin, that we would get another retest of this general range around the mid $60,000 range, and eventually have the technical setup to be able to completely climb through and get a parabolic price for Bitcoin somewhere around 150 to 200K by the end of this year. And we still stand strong by that. I know everyone's saying that we must be in a bear market with things stagnating this way, but again, we understand the expanding cycles. We understand that it's going to take longer to see the kind of price action people were expecting back here in November, right? We were always against that perspective. And on top of that as well, it's important to understand that, as with the expanding cycles, we're also not going to have as heightened returns. But if you can look past that reality and not get bummed out by it, you really start to realize that all the signs in the market, even during this period of fear, are showing lots of signs of confidence that are not indicative of a bear market. Take a look at altcoin dominance here, right? All the while, yes, there is introduction of new altcoins in the market. Yes, that is going to have some effect on this. It's nowhere near to the degree that can start to damage this clear indicator here, as showcasing the trend that altcoins are not completely selling off. They're keeping pretty much on pace with Bitcoin, and of course there are some outliers that are doing worse and some that are doing better. But overall, when we take a look at what makes up the majority of this dominance, right, the real areas that people are invested and exposed in the market, we can see dominance isn't declining. And that has a lot to do with what's happening with Ethereum. Ethereum not only showing the same resiliency as Bitcoin since back here in January, with higher lows during corrections, as we're generally still seeing price come up and revisit back up to the near $5,000 range or the mid 4,000 range as well. But when we take a look at the ETH BTC ratio, it all comes into play here. We are still seeing, right, no matter what kind of technical analysis you want to do, we are seeing higher lows here, right? And the major point here, again, to think about when it comes to the psychology of price is that someone out there, no matter who they may be, is buying Ethereum on these discounts at higher prices than they did just a couple weeks or months ago. And that is indicative of an uptrend. It is indicative that people are getting confident that bulls still control the macro trend. That all the while there might be weak hands, there might be people getting liquidated by trading with too much leverage, a symptom of this unfortunate reality within our market. We can see here that people are taking that opportunity to buy into the market, buy spot, and hold positions long term, locking them up in the ETH2 contract as we're continuing to see growth there for the preparation of the network's upgrade, and so many other reasons. Now, if above all, that wasn't enough to convince that the trend is confident here, and we are setting up potentially the foundation to revisit the $60,000 range and above coming in the next few months, take a look at equity markets. The rebound we saw the other day was an over 3.36% move in regards to the previous close. If you take it into account from the lows, we're talking about an over 7% move. Look at this rebound here from the lows, the fearful period. The Qs in this case, broad measurement of the NASDAQ tradable ETF you can purchase, went from $318 per share up to $345. A major move for the index, pressing up to almost a 10% rally here in regards to its value. This is incredible stuff. Now, the one thing that's really important to focus on here is when you get these kinds of bounces during fearful periods, you can take a look, for example, back here during the pandemic, right? We could see here that when you start to have very sharp declines in price and then multiple days where you get, for example, 7% moves in price or 5% moves or 3% moves to the upside, these are, again, a sign that markets are starting to tackle with the fear that there are buyers coming in who, again, are going to start taking control back of the order book from the bears. And that's exactly what we've got here when you have these engulfing candles that make up entire previous days of significant losses and start to continue trending higher with solid rates of volume. That is a sign that the trend is back in control of the bulls. And this is something, again, as we talked about on the channel, is something that we pretty much expected. We expected a typical 20% correction in the market, what is generally seen in equity terms as a bear market, not in crypto, right? Crypto bear markets are much bigger. Whereas in equity markets, generally below a 20% correction is what's deemed as a bear market. And it can sometimes extend from 20 to 30% in most cases. We were looking at two significant general price ranges here. An area that was previous resistance for the NASDAQ, as well as support here 2 times in the past, right? Potentially being the worst case scenario, a 26.7% pullback. And along with that, we also were talking about this potential range of contestment here where we've seen resistance and support in the past multiple times. And price pretty much stopped out about right there. And now we're starting to see a rebound where equities are taking back control. Now, I want to go ahead and dive into this really interesting interview with Alex. But before we do, I want to let you all know about one thing. All the while, I feel at the end of the day, I don't want to speak too much in regards to geopolitics because I am no expert. I do want to say that I feel very much in line with standing by the people of Ukraine with what's going on right now. I think all of us are feeling for the people who are being affected by this at the moment. And above all, none of us want war. No one wants anyone to get hurt. No one wants to be persecuted. And because of that, I wanted to take a bit of what I thought might be a stand and maybe encourage other people to do it as well by donating some Ethereum to the open public addresses that have been certified by the Ukrainian government to help basically provide resources in order to probably buy military equipment, food, all kinds of things to prepare in order to fight back against what's going on. Again, I understand everyone might have different perspectives on it, but again, if this is something that you're interested in, I thought I would let you guys know that I made a donation, and of course I recommended some of my friends in the space to participate as well. So if you guys are open to it, any amount counts. And again, if you guys are looking for the addresses, you can find them on the official Ukrainian Twitter. Make sure that you get the certified addresses. You should see a tweet that's trending. We even have some people as well in the comments recommending the actual addresses here that you can donate to. And if you happen to, consider using the Crypto for Ukraine hashtag in that case. We're going to try to get a movement of people and showcase here that the crypto community is driven by bringing the world into a position where money can be a form of speech once again, that we can stand for the things we believe in. And I think that that's a really beautiful element of cryptocurrencies. There is no government, there is no payments infrastructure that can censor my ability to go out and support something that I stand by. And I think that's a very beautiful thing, especially in these dark times. So anyways, I've rambled on enough. Let's go ahead and dive into this interview with Alex Mazhensky. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with a longtime friend in the cryptocurrency space, a man who has kept very busy over the past couple of years, scaling out what is probably the most successful startup in the crypto space back in 2018 and 2019 into an institutional giant in the crypto deposit space. I want to spend some time talking with Alex Mazhensky, the founder and CEO of Celsius. Alex, thank you for making the time. I know we've got a lot to talk about today, but I know you're a busy man as well, so thank you.
No, sure. Thanks for having me, Nicholas. And we're both now OGs, right? We're officially OGs in this industry. I totally agree with you. I think we're going through ups and downs, but we always end up at a higher plateau. So the industry is definitely aggregating more and more users, and great to see new faces at conferences and online, and see old familiar faces like you. So thanks again for helping educate the community and creating content, and that's exactly what we need to get to mass adoption.
Absolutely, Alex. I know you guys have played a big role in that. One quick flashback before we dive into it was back in Consensus of 2019. I remember when no one was talking about crypto at the time, and at Consensus, I remember chatting with you and I think Stani at the time as well from Aave. And it's incredible just to think from those kind of milestone events how far we've come, and that kind of helps me to alleviate all the concerns around volatility and just see how far Celsius and so many great apps have come.
To emphasize what you're saying, Stani and I were on the panel, and the moderator from the Wall Street Journal didn't even show up. They were like, "Oh, what a waste of time going to a crypto conference and moderating a panel." So she didn't show up, and we ended up moderating the panel ourselves, and here we are. Both Aave obviously and Celsius are doing very well, and these are very needed services that help basically like the primitives that make everything else possible. So definitely, I think our dreams have come true, over the last few years.
You got a big success story to lead by, Alex. I think it's a very cool story. And I do definitely want to dive into Celsius as a company for sure, for those who may not know, and also talk about some of the big announcements that you guys have, because your original focus as a platform has been this ability, to get yield on crypto assets, as well as be able to take out loans and utilize crypto collateral. So we can dive into that a little bit later, but I wanted to spend some time. Alex, when you're working with Celsius, I know that you get a really deep oversight of the market. And, a lot of people come here watching Data Dash, like myself, are eager to get an idea of what's really going on behind the scenes when it comes to these kind of consolidative waves. We've had two of these in 2021 and 2022, and I think we're going through probably the later stages of the second one. But what's your take on what we're seeing right now?
Yeah, so we're recording this last night. Russia invaded the Ukraine, right? And obviously that is causing a lot of risk off, or a lot of stress in the markets. And the analogy is like crypto is like a young pup, but we are tethered to the owner, and the owner just keeps pulling us back, and it doesn't let us run, doesn't let us go where we want to go, and the owner is really the stock market, right? So I think we're still tied to the overall markets. We're not decoupled from the performance of the indexes. So when the Qs are going down, or the stock market effectively is in risk off, so is crypto, right? So, and really what needs to happen is separation, or this bifurcation of the crypto market versus the risk, the stock markets, right? And we haven't seen that yet. So every time we've seen if it's a Corona disaster in 2020, right? Bitcoin took a 50 or 60% drawdown. Same thing happened in 2021. Same thing in January of 2022, and we're just seeing a continuation of that. First, it was the Fed, right? So the Fed scared the markets, and they took a beating, and crypto took a 30% drawdown, while the markets took a 10% drawdown, right? So it's about a 3 to 4x ratio. And until we have enough kind of, I would say, professional investors or hodlers dictating prices. Today, the prices are dictated by speculators, by people who are effectively trading. One day they're trading Tesla, and the next day they're trading Bitcoin. And if you replace that with people who really believe in the asset class, right, and they are the ones pricing it, then you will see that separation where, again, Bitcoin is a safety asset. Bitcoin should be behaving as a safety asset, meaning going up when there is stress, when there is a lot of uncertainty. and behaving in the opposite way to the indexes. And that hasn't happened yet. And when you start seeing that happening consistently, then you know that we really are going towards that, initially to that 150 to 200,000 level. And if the governments continue to print money all over the world, you'll see it hit $1 million over the next decade.
I'm curious. I got to ask you one quick question, Alex. Do you think the Fed, now with all that's going on right now, one thing I've talked about on the channel is kind of taking a contrarian view to what the Fed's been saying it's going to do, right? It said that it's going to start to return course as inflationary pressures have built. But do you think the Fed is still gun-ho on, raising interest rates and on top of that, reducing the balance sheet? Or do you think that they're going to take a reverse on course for what they're saying?
So the Fed is trying to slow down markets, right? Well, raising rates, what does it do, right? Or pulling liquidity out of the market or stopping QE is slowing down the economy. Like the end result of all of this is slowing down the economy. By slowing it down, it will also reduce inflation, right? So this war in Ukraine is already doing that. It already achieved the Fed's goal. So I definitely expect the Fed to either pause or do much smaller raises of the interest rates. Zero is not a good rate. I think they're definitely going to go to at least 1%, maybe even 1.5% before they stop, because that should be kind of the basis from which they operate. So I don't see them not doing anything. I just see them doing it much slower. Some people were expecting 7 hikes this year.
Yeah.
So I think bets are that it's going to be 3 to 4. Again, if we see no inflation or we see a recession on the horizon, because you have to remember, again, when people go risk off, it affects everybody. It affects buying. It affects real estate prices. It affects everything
money
else.
Stops circulating as much. The velocity of money really starts to drop off.
Exactly. And so we have to see what happens, and they may have to go and even do the reverse. They might have to go and create more liquidity to make sure that we don't fall into a deep recession.
Yeah, that's a very interesting perspective. I think it's a middle ground one, because I'm in the belief as well with you that the Fed will probably see a couple interest rate hikes this year. And then, as you mentioned as well, with the balance sheet, that's the one that everyone's been very confident as well is going to be starkly reduced. That's what they've been kind of stating. And I think Goldman Sachs or JP Morgan put out a report similar. But I'm in that kind of middle ground boat where I think we'll see interest rate hikes. But again, as you mentioned, these macro events have really put the Fed in a position where they don't have to do too much. I think in the current state of things. So, but anyways, I know we went a bit macro there, and it was interesting to get your perspective on it, Alex.
Let me add one more thing, because it's important for people to understand that is the inflation that we're seeing transitory, or is the inflation permanent? And inflation comes in several forms, but here we have inflation mostly because of the disruption of the supply chain. So over 2 decades. We've optimized everything so it's delivered just in time. Like your iPhone that you're ordering from Apple have been built in China just a few days before you ordered it, right? And shipped just in time, right, directly from Honhai, which is the manufacturer, to you, right, to your home directly, right, drop shipped. So and all the components, there are thousands of components that go into each phone. We're sourced and delivered just in time. Everything is optimized to the hilt. So when there's a disruption, any kind of disruption, right, it causes chaos when everything is fully optimized. And the world got too used to the fact that for 75 years, we didn't have any disruption. There was no wars, basically, since World War II, right? No big wars anywhere around the world. So what we're seeing now is finally everybody realizes that doing this last minute perfect supply chain is not something good, right? Because most companies now are paying much higher prices for the components for their supply chain, because
just to make sure they can even produce the good that they're trying to build, like automobiles, et cetera. Yeah.
And so the inflation you're seeing is because people are now hoarding components, microchips and anything they need, right? Because they know that, gosh, what if things get much worse, right? So the hoarding is the inflation that you're seeing. And when you finish hoarding, you're going to have basically the inflation is going to disappear, right? So it's when the Fed says it's a transitory inflation, it's because of this massive hoarding. All the companies around the world that use just in time have to migrate from just in time to having inventories to avoid these rise in prices, right? So it's a temporary thing. And after that, we're actually going to have a reduction, a very large reduction in GDP and so on, because everybody's already sitting on a lot of inventory and they need to monetize that before they place new orders, which is going to cause us to go to very low inflation. So, but the Fed had to do something. They basically they said, well, what if we're wrong and this inflation is a runaway inflation? Let's put the brakes a little bit on the economy. And now with the Ukraine, they're going to have to take the foot off the brake again, and maybe even put the foot on the gas again to make sure that everything keeps running.
Just keep liquidity flowing through the system like they did back in 2020. I'll never forget when I was in New York in March of 2020, and there was actually I was with Leah and Wasim from Celsius. And we were watching as the market was down around like 3,900. And I was like, well, the Fed's got to have a big plan for this. And boy, did they have the biggest plan we could have imagined. I mean, really.
They always have a bazooka ready, and they can fire it again and again and again. The Fed is the reserve currency of the planet, right? They have this as much gasoline as they need to to throw on the fire to make sure the fire keeps going. And the fire is the world's economy, right? It's not just the U.S. economy. They effectively, by putting the lever on or off, are controlling the total activity across the world, because 80% of all transactions are denominated in dollars, and the liquidity of dollars, availability of dollars, dictates global GDP.
Very interesting perspective, Alex. Yeah, I mean, it's incredible. I think Neil Kashkari, who is like one of like the I think either the central bank governors or one of the heads of the central bank, he said we have infinite liquidity at the Fed. That was the infamous statement back in 2020. And it's true. I mean, I think we've seen it play out and stuff that the Fed will always have that a means to print money, in this case during times. And again, it's meant to be, again, people have different opinions of, but the sole objective is to keep liquidity flowing to the system when there's some type of period of time where banks aren't lending as much, people have stopped circulating money, the velocity of money has declined. And that's been a continuous problem, I think, in the economy over the past couple of years, is that decline in velocity with the introduction of money as well.
Right. And the Fed has to now provide liquidity to Europe, because Europe is going to have a much bigger problem than the United States. Their reliance on Russian oil and gas, their economy is much more integrated. The United States has very little dependency on Russian oil or on natural resources or components coming out of Russia, right? So, and now that sanctions are going to be put on Russia and all of its kind of extensions, I think you're going to see much bigger impact in Europe, which is going to result in Europe needing liquidity from the United States. So you're going to see
the dollar moving over, and wow,
yes, the euro dollar. You're going to see a lot of movement in that euro dollar, which is again good for the United States, bad for Europe.
God, that's interesting. I hadn't even thought about it in that case, like the kind of really the macro liquidity flows from money coming from the U.S. to Europe. So. But yeah, I think we can only hope things will get better and stuff over the coming weeks or so. But
it's kind of like what happened in World War II. Europe was basically much more in war than the United States, right? There was no war on our shores. We were just fighting the Japanese and the Germans and the Italians. But basically, we ended up after World War II. We ended up the strongest and the strongest economy with the most infrastructure. And that's the same thing that's kind of happening now. The United States is going to benefit from this. Russia thinks it's hurting the United States by invading the Ukraine, but actually it's giving the United States another round, an extension for the dollar, right? The dollar is going to be stronger for much longer because everybody has to rely on the United States for liquidity, for supply chains, for everything else. So the end results of, and I'm Ukrainian, so
Yeah.
I was born in the Ukraine, so this is dear to me, obviously. But the geopolitical outcome here is that Putin is going to get his legacy, is going to basically be viewed as the guy who tried to bring Mother Russia back together and recreate the empire that existed when he was in the KGB back in the early days of the USSR. And on the other side of it, the United States is going to become stronger because all of the satellite countries that thought that they could are going to depend on a dollar in the United States, and this gives the United States much more political power as well to dictate policy and dictate kind of weaponize the dollar to make sure that everybody does our bidding.
Interesting. That's a really interesting perspective. Yeah, I'm curious to see how it'll progress over the coming weeks or so. But I hope it, like, I think we both are hoping in this case it won't get to that point. But again, as you mentioned, the U.S. does hold that position, I guess, overall and standing in this. One thing I was going to ask you, Alex, real quick, is in regards to Celsius. I want to come back to the company. You guys have built, honestly, a really interesting legacy over the past couple of years. Right now, Celsius, I think I checked the last AUM statistics, are over, is it 17, $18 billion right now for crypto assets held? I mean, how did you guys get to this point? I mean, it's incredible that you guys have scaled up just so much in the past year or so.
Sure. So the secret, if everyone wants to know what is the secret to Celsius success, it's very simple. We paid $1 billion to our community, more than anyone else in crypto, right? So if you look at any of the DeFi platforms or any of the CeFi platforms, and you ask them, well, you brag about your rates, but how much did you actually pay your community? Celsius stands alone at paying so much to its users, right? So if you think about banks or financial institutions, their job is to get your money for free, right? Or pay you almost nothing, 0.1%. Extract as much as possible out of that liquidity, right? Lend it out on credit card, lend it out to commercial customers or exchanges or market participants, and then deliver all that profit to shareholders, right? The JP Morgan or Goldman Sachs takes all that profit and every quarter gives it as dividends to their shareholders. Celsius does similar things. We're not a bank, we're not FDIC insured, but we take the same liquidity just in crypto, right? Bitcoin, Ethereum, and so on, stable coins, extract yield from, or extract pay from institutions and exchanges, and deliver all that profit to our participants, to our customers. And that's why Celsius pays, right now we pay 11% on stablecoin, right? You can earn 11% on your dollars, where your bank is paying you 0.1%. That's 100 times more. And what most people are struggling with is how is it possible that Celsius pays 100 times more than your bank? Somebody must be lying. Somebody must be really cheating here. Are the banks really abusing us so badly? And somebody's finally opened the curtain and showed us how bad it is? Or is Celsius really just a scam or some kind of a bad actor that really is doing really, really bad things? So we've been around for almost 5 years. Like you said, we have close to 20 billion in assets. We've paid $1 billion to the community. We have 1.5 million customers. We've been scrutinized by regulators and other people every year, and we're still standing, right? So obviously the bad actors, well, I shouldn't call them bad actors. I should just call them people who take advantage of your money. The banks and the financial institutions just take advantage of it. They don't have to pay you.
Yeah, I wanted to build on that, Alex. I think the two things I always try to bring up to people when they have this question about the yield, because we've had some users ask us, we have Celsius integrated in Digifox, and I always explain to people it's generally twofold reasons. The first one, which you hit on perfectly, is the traditional financial system doesn't care about its depositors, yet banks in this case, or deposit institutions, are only powerful because of the depositors and the money that they've deposited. But you can go look at JP Morgan, you can take a look at Bank of America, any major corporate bank. and you'll look at their profit quarterly earnings, and you can see exactly that margin you should have been getting on your deposits. And on top of that as well, in regards to Celsius with yield, I mean, one of the things is that the biggest thing that I love about Celsius is that you have many avenues of getting yield. Of course, there's lending to institutional clients, and many of them in this case, they're not only reputable institutions, but they're ones that are willing to pay really solid yields, bigger than the one that you pay to the depositor in this case. And of course, there's always a slight margin, but Celsius gives 80% of its profits back to the community. So did I miss anything there? Because I think those are really the 2 points that kind of explain it. There's a lot of great lending opportunities in crypto, but at the same time, in the traditional system, as you said, it's just they make money hands over fist on their people, and they don't even no one even questions the banking system and that margin of difference.
Yeah, and a lot of it has to do with the consolidation of the banking world, right? I mean, the top 4 banks in the United States have more than half of all the deposits. So they have tremendous pricing power, right? And most of us just don't understand that like you said, banks can pay us 5, 6, 7% and still be profitable. They just choose not to do that. But it's important also that every one of your viewers understands that we do have the power, meaning, like you said, that the banks can only operate because they have our money. And most people say, well, but I only have $10,000 in my bank altogether. Well, how much good is it going to do if I pull that out and I move that to crypto? You have to understand that banks operate on leverage. So every bank is leveraged 10 to 1 or 20 to 1. When you withdraw $10,000, they have to close $100,000 or $200,000 worth of loans, because they are relying on these reserves to be able to operate as a bank. They have rules by which they can only do leverage based on the ratio of their assets or their deposits to their loans. So you actually, as a user, your pocket does matter, because you have 10 or 20x the leverage that you think you have. Yeah. And that's why when we migrate people from TradFi to CeFi, every user is like a treasure, right? Every user is so important. And that's why Celsius always acts in the best interest of the community, because if we want to win, right? If your coins or my coins are going to be worth more, it's because we brought 10 or 100 million people, new people, into crypto. And they are the ones, because they also hodl, your coins are going to be worth more. You got on the bus before them, and that's why they're going to be worth more. And that's when you listen to Michael Saylor, when you listen to other people, that's what they've done. Michael Saylor bought $4 billion worth of Bitcoin. He got on the bus before many other people, and now he's running around telling everybody, this is the best bus. Get on my bus, but get on it after me at a higher price, right? So which is fine. I do the same thing, right? So we do have in our own best interest in mind, but the point is that as a community, in this community, we are acting in our own best interest. Everybody in the Celsius community or in the Bitcoin community, on the Ethereum community, acts in our own best interest and not in the bank's best interest.
Very interesting. It's interesting you're talking about the leverage ratios are basically deposit requirements at a bank per the amount of credit that they generate. So it's interesting. People don't know how much power they have in their hands by just simply speaking with your money and putting it in an institution or a place that at least respects it, gives you proper yield. One thing I wanted to dive into, because I think, Alex, like what I really admire about Celsius is the conviction to building a mainstream application. And you always said this. I remember back in the old pitches, getting the first 100 million people into the crypto space, like really getting like everyday newcomers into crypto. And that has always been one of your guys' drive. You guys have got a major community now at Celsius. And now you're working on Celsius X, which just got announced officially or kind of revealed over the past couple of days. So I want to go ahead and give you the stage here to talk about Celsius X a little bit. I understand that the general kind of tagline is that you're bringing a bridge between DeFi and CeFi. You still believe in this case that we can have a world of centralized services, whether it be exchanges or platforms like Celsius, and also bridge into the kind of multi-chain world of various different blockchains. So feel free to take a little way on that. I'm eager to hear a bit more about what your long-term vision is for, because it seems like a new chapter for Celsius.
Yeah, so the website, by the way, is celsiusx.io. So if you want to learn more about it, definitely go take a look at that. There's a lot of technical content over there. Also on Twitter, if you're following Celsius Network, you'll see a lot of content there. But if you think of the first 5 years of Celsius, it was basically a bridge between, we built a bridge between TradFi or traditional finance and CeFi, right? So we basically said, look, if you want to bring hundreds of millions of people over, most of them are not going to know how to handle their private keys. They're not going to know how to earn yield. They're not going to know how to take a loan. So let's enable all these services for them and make it really easy for them. They just come in. It looks like a Twitter account or a Facebook account, you know, and Nicholas, you did the same thing, right? You build an app on top of the Celsius infrastructure to make it easier, provide services that Celsius didn't provide, right? So now we're building a bridge between CeFi and DeFi, right? So we're saying, look, there are over 200 blockchains out there, right? And all of them are different. Each one of them offers something different or unique. And how do we take, instead of these islands of liquidity and islands of connectivity, how do we create a giant ocean of liquidity and connectivity, right? By linking all the 200 chains together. So if you look at all of our competitors, they all launched their own chain, right? Binance launched their own chain. Crypto.com launched their own chain, right? Everybody, when they grow up and become bigger, they end up trying to compete with the other chains. Celsius is trying to do the opposite of that. Celsius is saying there are too many chains. Why don't we unite all the chains? Why don't we build roads and bridges between all the chains instead of launching yet another chain and trying to convince everybody to move over from that bus to our bus, right? So Celsius X is exactly that. Celsius X allows you to take any asset, right, that Celsius supports. Today it's 53 different assets. Soon it's going to be over 100. And wrap it, meaning you can lock it on the Celsius network, on the Bitcoin network, for example. You can take one Bitcoin and hold it, lock it on the Bitcoin chain, and then issue it the same equivalent. Celsius will issue the same equivalent on, let's say, Polygon, right? So what does it mean? It means that now there is a token on Polygon issued by Celsius. Anyone who owns that token can redeem a full Bitcoin on the Celsius network. We don't care who shows up. If you have that token, you give it to us, we burn it, right? Because you can create double spend, and we will return to you the Bitcoin that was originally provided to create that token, right? So, and that wrapping service effectively competes with the bridges that exist today. So if you looked at, there are many companies that try to provide bridges, for example, between Bitcoin and Ethereum, or Bitcoin or Ethereum and Polygon, and so on, by wrapping assets through a bridge. And those are very risky, right? We've seen hacks and scams and all kind of problems. And even Vitalik himself recently posted several tweets saying, look, maybe the solution is CeFi and not DeFi when it comes to wrapping. Because what CeFi does, what Celsius does, is that we issue these on basically on a native chain, meaning we don't create a bridge that try to hold to the two chains together. Right. We lock up one asset and we mint an asset on the Polygon chain, which has no really risk implication. We're not relying on code to hold the two chains together.
It's purely in this case, yeah. So it's just Celsius facilitating the entire service, and there's no bridge in this case that's holding those assets. It's purely Celsius in this case on the native chain.
Right. So you still have to, if you do the bridge stuff, you have to trust the bridge.
Yeah.
But here you have to trust Celsius. So you have to ask yourself, what do you trust more? Some of these bridges are written by people that you don't even know who they are. No. Right? And do you really have time to go and audit every bridge and every code? So when people move stuff over bridges, they rely on that bridge to be sustainable. It's like taking a car and trying to cross on a rope bridge. You don't know if the rope bridge is going to hold or not. And even after you crossed on the rope bridge, let's say you made it to the other side, you don't know if you can come back, because the minted asset that you have received through this bridge only exists as long as the bridge is stable. If a hacker comes in and breaks the bridge, because they basically hack the bridge, then all the assets that were created on that bridge are at risk.
Yeah.
Right? Versus at Celsius, it's a minted service, meaning natively minted. We are creating a new token on Polygon or on Ethereum or on Cardano.
And just to build, I just wanted to clarify this for those who may not be like too familiar with bridges. So generally speaking, anytime, guys, when you want to go about, transacting liquidity, as Alex was mentioning, let's say you want to take Bitcoin and turn it into wrapped Bitcoin, or, for example, migrate it to a new chain like Polygon that might have lower transaction fees. Depending on what like chain you're on and what you're migrating to, you're going to have to use a whole variety of different bridges. And there are some that seem more secure than others, but there have been a ton of vulnerabilities on these bridges that have resulted in the loss of hundreds of millions, if not billions of dollars of funds in crypto. So what you have now is an alternative, whereas instead of having to trust these random bridges in order to get to where you want to go with your liquidity, you're able, as Alex mentioned, to be able to simply have it deposited as you probably normally would with Celsius, if I'm correct on that, Alex, and have that wrap token that you guys are issuing that in this case is fully redeemable for the core assets back through the Celsius platform.
Right. And we have examples of that, like WBTC. It's a wrapped Bitcoin issued by BitGo, right? So BitGo is a centralized provider, just like Celsius. They lock up a Bitcoin and then they issue a wrapped Bitcoin, WBTC token on the Ethereum network. Now, again, Celsius does exactly the same thing, but we do it for free. We don't charge you any fee to mint or to burn the token when you come back out. But that token, WBTC, is one of the top, I think, 20 tokens today. And obviously, there's never been any problem, any hack or any issue on WBTC. So imagine hundreds of WBTC equivalents issued on multiple chains, right? Because we can take that asset, Bitcoin, and launch it on any EVM compatible platform, and those are interchangeable. Now you can go from any chain to any chain, and at any time, if you want to withdraw the original Bitcoin, it's always there. On top of it, what we've done in our partnership with Polygon and Chainlink is that we are the first to implement the Chainlink proof of reserves, where Chainlink as an oracle is looking at all of these issued assets and verifies that, okay, the original Bitcoin is still locked and is still not being double spent, right? So when you're using the wrapped asset, you know for sure, not just because you trust Celsius, but now you have trust and verify. You have somebody else, a third party, verifying that what Celsius told you is happening. And if at any time something changes, you get alerted by Chainlink that, hey, Celsius is not doing what it promised, right? So it's important to understand that this is not just, okay, don't trust that bridge, trust this bridge. It's a native minting that is also verified by a third party. And until now, no one has been doing that, right? So, and we do this as a utility for the community, right? This is a utility to unite the 200 different blockchains so we all win together against TradFi, right? So why is Celsius so generous, right? Why is Celsius offering something for free that everybody else, even in crypto, has been charging you for, right, until now? And the reason is that, again, we have the two bridges. We have the bridge to TradFi and we have the bridge to DeFi. And it's in our best interest to create as much liquidity and as much movement between those two bridges, because it will make Celsius even more valuable, even more powerful. And the outcome of that is more payout to the community. So who wins? The community wins. Who loses? The banks are losing. Like, there can't be a better scenario here, right? So, but it only works if we all work together. If we all compete with each other, if we're all trying to create more and more chains, we are fragmenting the liquidity. And that allows the banks to win much, much longer, right? So let's unite the liquidity on the DeFi and CeFi side. Let's create larger and larger bridges towards TradFi, bring as many participants as possible, develop many new capabilities, and win together.
And two quick questions I had, or one's more of a statement in this case, and another is a question. I think one thing, Alex, that puts you guys in a great position to do this is that, as we talked about earlier, the assets under management that Celsius has. already has a gigantic pool of liquidity, and having this streamlined kind of turnkey solution that will allow it to basically deploy on a variety of EVM or Ethereum virtual machine compatible chains, that's going to help you guys roll this out and really be able to get it out into a variety of different layer 1 or layer 2 protocols. But on top of that, one question that I had here, I'm blanking on it here. I was just thinking, the question I had is that if you think about it, you could technically take your let's say, for example, you had like a Celsius wrap token for Bitcoin. You could take it and go utilize it on layer 1s and layer 2s, however you like. One question I had is, would you still get yield on the assets in this case in Celsius while they're sitting there? Like, so you get your wrap token, but while your assets are there, it's still interest generating, or because they're locked in the protocol, would they stay there?
Yeah, so you can double spend, right? So just like you cannot use this asset at the same time.
It's stuck there, yeah.
It is exactly, it's locked up, and the new minted wrapped asset is the one earning yield, is the one participating in different AMMs or different pools and so on. Okay. So if you double spend, then you have obviously you're breaking the cardinal rule of crypto, right? So we, just like when you take a loan, you cannot earn yield and take a loan at the same time. You have to do one or the other. The same way when you use Celsius X, you're either earning yield or you're using Celsius X to take the value, lock it up, and transport it to a different chain. Because, for example, Bitcoin is earning a higher yield on Polygon than is earning on Bitcoin with Celsius. And that's fine. You don't earn yield from Celsius. Take that Bitcoin, wrap it, put it on Polygon, and earn a higher yield, right? So Celsius is not doing this because it's always in our best interest. Sometimes you will find other opportunities on other chains, but you have to be very careful and know what you're doing, because the minute you enter the DeFi world, you're entering the Wild West, right? What Celsius provides to you is basically a walled garden where we did the work, we verified the protocols, we take responsibility. If something goes wrong, we take the responsibility. But the minute you go out into the DeFi world, either with Celsius X or directly, you are responsible for all the outcomes. And we've seen again and again that even people who thought they were insured realized that the insurance doesn't cover everything, and they ended up losing assets or not be able to recover their assets, or and so on. So really, if you're a pro, this is a great tool. If you're a beginner, stick with Celsius. Basic Celsius. Don't do Celsius X.
That's one thing I was going to say, Alex. As much as I love this ambition that you guys have and stuff, and I think overall it's a great product with the fit in regards to the company. But I have to say, as much as I love DeFi and AMMs, and all the while I think it's going to play a big role in things long term, I think we're still at a position where if for 90% of people who I chat with in the crypto space, if you're looking to get yield, if you're looking for a safe place for your crypto, Celsius is a good spot to go to. So, Alex, I mean, this has been a whole whirlwind of different topics we've got to dive into. As usual, it's always interesting conversation. But I just wanted to emphasize for those of you who are watching, if you guys wanted to learn more about Celsius X, you guys can also check the link that Alex was mentioning. I'll leave it in the description so you guys can check into it. But Alex, is there anything else you wanted to close off on, or?
Sure. So just quick updates on other things. We launched a new version, version 5 of the Celsius app, which has many new features, including swaps. You can instantly swap from any asset to another, not just without fees. A lot of people tell you, oh, we don't charge fees, but they charge you spreads, giant spreads. Celsius gives you an institutional or a wholesale rate that beats basically everybody else almost all the time. And because of that, you can swap from any asset to any asset, getting more coins. You end up with more coins. You earn yield with Celsius, you end up with more coins. And Celsius consistently, on average, has been paying the highest yield. You might see DeFi spike higher than Celsius, but usually it will only be for a few days. It cannot stay there consistently. And also, we always provide loans. So if you need a loan against your Bitcoin or Ethereum or any of the 50 assets we support to defer your taxes, or you need to pay your credit cards or anything like that, we are probably the best source for that. 1% APR loans on most assets. And so super excited about that. We also recently raised the second largest round in crypto's history, 750 million, from top institutions and have hired some of the most reputable, respectable people on Wall Street from TradFi, right? So the ex-CFO of Royal Bank of Canada and the COO of Citi, that both joined us recently to help scale the company. And the fact that these people are leaving TradFi and coming to crypto, and specifically coming to Celsius, is a huge validation of the fact that we're building the future of finance. And we want to take the good actors, the great people from TradFi to help us build those bridges between the two worlds.
Yeah, Alex, I mean, with the recent CFO hire that you guys got, the raise that you've been able to complete, I mean, it's just amazing to see how fast you guys are growing. So honestly, again, it's not something new for you though. You're a serial entrepreneur. You've founded many companies before. I think it's just one of many great innovations that you've led on, and you have such a great team that you've gotten to work with as well, and stuff from Nuke and everyone that I've gotten to chat with at the company. So I just want to say a big congrats to you on everything you guys have been able to achieve. And if you guys haven't already, definitely check out Celsius. It's a platform I've used for a long time. We have it again integrated into Digifox. I'm a big believer in what you guys are building, Alex, at Celsius. So thank you so much for making the time. And it was just an awesome conversation to have.
Thanks for having me back.